Do you think it's that one little golden moving average level, or that one golden way to pinpoint the right zone, or that golden little footprint software with the DOM in there that shows you the exact buying level that you can enter on with your million lots and just see it fucking expand to $3 billion?
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility.
All right. Hey, how's it going, guys? Welcome back to mentfx. It's a pleasure to be back here. It's a pleasure to have everybody on. It's still August 18th, so if you guys notice, the previous video came out on this same day, so it's a pleasure to be here again. As you guys know, a lot of stuff is coming up in my life, so I want to get a few videos recorded and get those released as the stuff in my life starts happening. I'm about to hit 100K on YouTube, which is phenomenal. I'm about to have my daughter, which I'm very excited for. I'm just engaged to my fiance too, and we'll be getting married probably at the start of 2023 or 2024. I think 2024. So very excited for that. The group continues to grow. Mentfunding continues to grow, and we keep funding some of the best traders in the industry. So it's been just a conglomeration of a lot of crazy stuff going on, and I have a lot of you to thank for it. But also, you know, it's a result of a lot of the stuff that you get to learn here. And as a result of that, the personal group has continued to grow. Mentfunding has continued to grow. And I've kind of been able to take a back seat and basically take a step back and allow everything to flourish while having time to spend with my family, my upcoming daughter, and everything else that's going on. So just going to start off this first 2 minutes to thank all of you for your immense support, to tell you guys that everything for me personally is going amazing, you know, to pass on the goodness and hope that a lot of good stuff is going on in your lives, whether you're still learning, getting into learning, maybe just finished college, maybe stepped into a job that you can, you know, secure a potential financial future for yourself where you can begin to study other things, you know, another skill set. If you're watching me, you're probably learning the skill set of trading. So just want to let you guys know that wherever you are in your journey, consider yourself blessed. It's amazing that you guys are able to be on this journey, experience it, learn with it. And of course, the more time you dedicate to it, the more you're going to excel. And the more time you dedicate to it without quitting, while also doing the things that a lot of people don't want to do, the faster you're going to excel above the 90% of people that don't want to commit the way they should. Right. So in the previous video, we spoke a little bit about this entry here. And today I just wanted to break it down further by showing you guys that it's not all sunshine and rainbows all the time when it comes to trades like this. This is a once in a blue moon kind of thing, right? This is my first trade of the actual year that ended up running to the 50 RR, and will be my first trade of the year completely that will run to 100 or 200 if it does happen. I think I've had one other trade this year run to the 50 RR, but I have not had one run to 100 RR this year just yet. So looking forward to that if this continues running. And as you know, as per the last video, this is also recorded on August 18th. So it's just going to be in the pipeline. It will come out a little bit later. And hopefully by then, this market would have made its new low, which would be this daily low right here being taken, this guy right here, as part of this 3-box setup, right? The move down, the SND, which by the way does not always have to be tapped, as we know, but the overall target laid out right here by way of this high and this low, and looking for that continuation, whether it be like that or whether it was like this. However, as per the last two videos, or the second video before this one, so not the one right before, but the one before that one, where we spoke about how, you know, this intermediary structure right here, right in here, would end up more likely than not ending up being a stop out on a lot of people that are trying to trade it as a long, or trying to use all the demands here to go as a long, or trying to use this support resistance to go long, or whatever it might be, because we understand that, you know, people have different strategies and you can get in many ways. But if you have a poor understanding as to where the market wants to head or is most likely to head, when you get involved using your given system, in this case onto a long, wherever that might be, you are looking to protect yourself more likely than not under some lows here, maybe these lows, some people under these lows because that's for them a major low, some under here to account for the liquidation below this support resistance. So most people, you know, under this main low right here, of course, for people that are trying to predict and anticipate the low. So if you haven't seen my video called if you force longs, it's going short, this is what it's a lot about, right? It's the idea that when you get a low in the market, a lot of people want to start forcing longs. More people than you can imagine actually force those longs, which has been the case for EU for months now, right? We've been short on this. I've had tons of webinars that I showed you guys even on the public YouTube that we've been doing privately. We've had tons of people in the private mentorship catch the sell today as well with me, right? So again, just to showcase a little bit of that once again, because it's still the same day from when I recorded the last video, but just same trades, different management styles. A lot of people holding this out with the understanding that we don't always know, nor can we always predict price, right? But what we can do is we can formulate an understanding around a specific entry criteria. And over time, as we execute upon it, we know that we can grow the bottom line because of the edge we have as a result of executing it. So even though at any given point, independently, we don't know if a trade is going to work, or will run to a target or won't run, or will run to a very high target or won't run. What we do know is that if we continue executing that system on repeat, that over time it's going to grow that bottom line. It's going to take your account and your equity curve, your balance curve, to all-time new highs, right? And as a result, you are going to be able to sustain yourself as a trader and call yourself a profitable trader. That's where profitability comes from. That's what consistency in this market is. It's the understanding that any independent one trade doesn't mean anything and doesn't derive any guaranteed result. But it's the understanding that over X amount of trades, whether that be 1,000, 10,000, or X amount of time, a week, a month, a year, you are to expect a positive expected value. That's where this idea of EV comes from. That's why a lot of the time when I'm teaching someone, I like to say basically, if I had to teach a poker player to become a trader, it would be or a professional poker player to become a trader, it would be a lot easier and could take a lot less time than someone who worked in any other normal job potentially growing up. Why? Because the mentality that comes with being a professional poker player, such as one that accepts EV and understands a random distributions of win and losses. So, over time, a poker player can lose a number of tournaments, but knows that if they continue playing with the given strategy they understand, that their EV, their expected value over time, is going to be positive. So over 1,000 tournament games, even if they win 2, 3, or 4 of them, the final standings of those poker games will allow them to be paid out X amount, which will usually be net positive over what they spent to be in tournaments. And as a result, they have what we can call a positive EV. So a lot of the professional poker players, you guys might not know this, if you follow any of them, they actually lose most of the tournaments they participate in. It's just that when they succeed in good tournaments, they get up into the high levels because they understand what they're doing and they get paid out big. And that's exactly what we're doing here. It's the understanding that over time, we're probably going to lose most trades or break even on most trades, or take trades that don't really act as anything crazy for our equity curves, right? An idea of this would be the idea that, if this is the start of your equity curve, you start out, let's say you take a few losses, you take a normal partial and a win, take a few losses, maybe some break evens, maybe a few more losses, take a nice partial, partial 1, maybe partial 2, then it stops at a break even. Then, you take a few more losses, maybe breaking even a little bit, maybe even a few more losses, take a partial and a win, take some losses, take a partial that then runs a little bit more. So now you're getting up into those upper echelons of those poker tournaments, right? Take some losses, take some break evens, take, again, some kind of win that comes across that now runs an extra amount for no reason. Back to the same thing, right? And then you can copy and paste this right here and kind of just repeat it. So let me just go like this, right? Let's move this over to the right and delete that guy, right? And then this kind of repeats over time. And over time, there can be some deeper drawdowns or whatnot, but it's the understanding that over time, you're going to take your losses, you're going to take those tournament losses, you're going to pay the fees to be in those tournaments, you're going to lose some, you're going to break even on some, you're going to finish in some decent standings on some. But even when you have good trades, right? So this is an example of, for me, I'll take break evens at -1s, and then here I'll have like a +5, right? Now, even though it's a +5 and looks very cool, it's a +5 RR, we secured a bunch. It might not put me at all-time highs in my account. It might still be under equity, but that's what sustains an overall break even to my account. And then when the runners come along, so the last 5-6 weeks, and I've recorded all this in my webinars as well and broken down all the trades. So if you want to join up with the private mentorship, you can do that and check out my private breakdowns as well as the trade breakdowns and how I use the concepts taught in the private mentorship. Those trades, the one that have run not just 5, but I've had multiple 5ers, and as well as that, had them run an extra partial, right? So to the next partial, get +6 secured. So that would be like a 25 RR for me, or a 50 RR, and it keeps running, just like the most recent trade I took this time based on this range once again to the bearish side. Got involved, understanding that this is intermediary structure that most people are going to be stopped out on, looking for the sells down into it. 4 hour shifts into the bearish side, as I spoke about last week. So make sure you've seen the video from last week, because my channel is progression and it's not one video standalone every single time. We had the shift on the 4 hour right here, became bearish. We had a target here to the bearish side, right, which now lined up with that intermediary structure with a higher time frame that's bearish. Look to get involved here, follow the 3-box setups during a liquid session, watch the session sauce video, watch the 3-box session, 3-box strategy videos, and you're going to see how all of this comes together. Got involved like I normally would, expected. So here's something that's a little bit of a psychological tip for some of you still watching this or that are here. A little psychological tip that you can use for yourself personally, and this is how I approach most of my days, is when you show up for your day, for your session, whether it be New York or London or even Asia, when you show up to your session, assume that there will be no trades. So show up, do all the analysis, follow the boxes, follow the 3-box rules, follow the S&Ds, follow what's going on the charts. However, as you come into the session, assume there's going to be no trades for you at all. You're just there to witness price, because that's all you have to do. And then, in the case that a setup does present itself and then you end up getting involved, assume instantly that it's not going to tap you in. Because I've seen a lot of people go like, oh, I had my setup, but it didn't tap me in. The whole system must be broken. I'm not going to make any money. It's like, no, the system is made to work when it works, right? And if your system is to have a tap in on a zone, unless you get that tap in, that trade is something that needs to run from you. It's a trade that you are not meant to be in anyway, and there's nothing more for you to do than to step back. And guess what? Approaching from a psychological level of, I'm not getting a trade today, even though I'm about to spend 3 hours or 2 hours watching price action, that's what's going to allow you to accept the fact that this is perfectly normal, and now is going to be part of your trading strategy rather than something that you get afraid of and frantic over, and then begin to FOMO when price begins to run without you, right? Like when you see this breakdown and you have an S&D here and you don't get an entry and it begins to run, you're not instantly clicking the sell button because you're like, I'm going to miss the move, I'm going to miss the move. And you're aware that the setup is only present, the edge is only present when the setup is present. And your setup can alternate. It can depend on what your setup is. It could be a Wyckoff sell stop. It could be a Wyckoff AR sell stop. It could be a Wyckoff AR retest. It could be a Wyckoff break and retest of the final supply zone, right? It can be a double MB as taught by the private mentorship. It could be a triple M, right? It could be a number of things as your main setup. However, if it doesn't present itself, you need to step back. So the number one thing you want to do when you come into any session is assume no trades at all. Assume that you're going to sit there for 3 hours and nothing's going to happen. This is going to have a big effect on your trading. You might think it won't, but it will. And I've had a lot of people talk to me in my private mentorship that have now been funded that have told me that this itself, this one little tip, changed the way they personally approached, and as well as that, changed the way they found profitability, got into good and actual good trades instead of taking anything under God's green earth, right? Like anything that just set up. Instead of taking everything that's set up, they waited for their entry criteria. And as a result, a lot of those people are now funded, and they attribute a lot of that success, even though, it's multifold. There's a lot of things you need to learn. There's not just one thing. A lot of it came with this small psychological shift. So approach any session, approach any trade with the context of, I'm not going to get a trade today. I'm not going to be getting a trade this week. I'm not going to get a trade this month, because you're going to program your brain to assume nothing and just watch the price. And then when the actual good setup comes, that's when you can get involved. Now, when the good setup does actually come and you look to get involved, assume now that you're not going to get tapped in. So not only are you coming into the day assuming that there's not going to be a trade, but now you're coming in assuming that you're not even going to get tapped in when there is a trade. Now, imagine you do get tapped in. Okay, great. Once you're tapped into a trade, so actually I had this happen to me right here. All right, I'm going to show you guys one thing really quick on the 1 second here. So personally, I was trying to enter, as we broke down in this Wyckoff schematic here, I'm not going to break it all down. This was based on a double MB from the private mentorship, which I will break down this Sunday. But very simply, I looked to enter a sell on this last up move before the down move right here, and you can see it was just shy of it. Did that lead me to FOMO into the trade? Did that lead me to get in as it began to fall off rapidly? No, not at all, because that's not how you trade, and that's not what you're doing as a trader. If you're someone that cannot accept the fact that price is going to run without you and you're not going to get into trades, and guess what? Here's a little secret. That's going to happen 99% of the time in your trading career, because 99% of the actual price action you're viewing is not price action that you're going to be trading. About 1% or even less of that price action is going to be your setup, your edge taking effect that you can then get in on and then have confidence in whether it loses, break evens, or wins. Because over time, as a result of testing, something that's very important and a lot of people don't do, 90% of people do not do that fail, you'll separate yourself from the rest and you'll be on a road to actual profitability. That said, price never tapped me in here, and that was it, right? I assumed this day that nothing was going to happen. I assumed there wasn't going to be a setup in the first place. Now, when there was a setup, I assumed I wasn't going to get tapped, and I didn't get tapped. And did I care? No, I continued to follow my strategy, because when I'm disconnected from the idea of needing to get tapped, I'm also constantly able to execute my rules. And if there is a setup, then I'm able to execute upon it, rather than sitting there going, please tap, please tap, please tap, please tap. Oh my God, it's missing. Maybe it'll come back. Maybe it'll come back. Oh, I gotta force sell into this so, I don't miss the move. You don't need any of that. It's not important. It's how the psychologically weak lose. It's how the dumb smart money, or it's how dumb retail loses. It's how hedge funds blow up. It's how all the bad things that you've ever heard about in the trading sphere go to shit. And you don't want to be one of those people. Most people are in that subsection. You don't want to be one of them. So when price comes up here, I'm already expecting no trade. When it doesn't tap in, that's what I'm expecting. And as price goes away, I'm still sitting here going, there's not going to be a trade today. I'm going to keep following this. And as we break down within the Wyckoff schematics here, that's where I got my entry, and that was great. However, to the next point. So 1, you're going to show up to the day expecting no trade. 2, if a trade begins to present itself and starts actually working, like this one here, you're going to assume you're not going to get tapped in. Right? So, you come into the session, it breaks down, doesn't give you an entry. Good, I expected it. Breaks down, doesn't give you an entry. Good, I expected it. Breaks down, doesn't give you an entry. Oh, wait, it's coming up. Okay, I don't expect to be entered. Doesn't enter you. Oh, I don't expect to get entered. And then finally enters you. Now, once you're entered, number 3, you're going to assume instantly that the trade is going to be a loss, because it's part of your game. You know that part of your edge and part of your bottom line increasing over time is that the trade is going to be a loss, and that's it. So you came into the day, you thought you were going to get nothing. Now you're going to get something, but you didn't think you're going to get tapped in. Then you got tapped in, and now you're going to think you're going to lose. So accept that. Say, yep, this trade's going to be a loss. All right, let it do what it needs to do. And then the trade begins to run the profit. It's not going to be a loss. Okay, what's it going to be now? It's going to be a break even, guaranteed. So let's go back to this trade just very quickly so I can show you my break even rules that I show you guys in my other videos, but I'll show you it today as well. So my personal entry was, sorry about that. My personal entry was right off of, I believe it was one higher. Oh no, it was off the Swick. So I entered as price tapped right back in right here with this candle, right? And then it broke down. Now, when did I break even? So as this broke down, I assumed that price was going to come back up and stop me out. It didn't. It kept breaking down. I still assumed for it to come back up and stop me out. It didn't. It made a high in the market, right? One that liquidated a previous high. This is a personal private mentorship tool that I teach. It's just a way to view structure. You can view them a number of ways. I might make a video on it in the future. And then it broke its own low, which means that we've officially put in a new structural range, a new 3-box system on this time frame. Again, kind of forget that it's a 1 second. Don't get too clouded by it or afraid of it. It's nothing more than just the same exact thing prorated to a lower time frame, and I personally enjoy lower time frame stuff more. So at that point, I moved my stop loss to break even. Now, what am I doing in my mind? Once again, I'm accepting the fact that this trade is about to just come back up and hit break even. So I came in expecting no trade. Then I expected to not get tapped. Then it tapped me, so I expected a loss. Then it broke even, so I broke even my trade. Now I expect it to come back up to break even. Why? Because I'm aware to build my edge over time and build up my bottom line as my capital builds, that I'm going to take a number of break evens and losses, and this is probably one of them. It doesn't happen. Keeps breaking down. Okay, I assume, because again, my first partial is always set at 1 to 10 to secure about +5 on the actual trade. So this was going to be my +5, right? It's +10, but I'm only taking off 50%. So I'm securing +5 on this trade. Okay, I assume it's not going to happen. I assume as price even comes down here to this low, that it's going to come back and hit me out of break even. Now, again, you might think I'm bullshitting here or that I would actually just close when it's moving down here. I don't. It's part of my strategy. I understand what my strategy is. I've experienced it for thousands of hours. I've tested it multiple times. I have journals upon journals of stuff that I've done personally. I know how this edge functions over time, so I know what I need to do to allow that bottom line to build. And you can also see a number of my other videos where, price comes like 0.1 pips away from my TP, and I don't take it, and it comes back up and hits break even. A lot of my personal mentorship students, maybe if you guys are watching this, leave a little comment in the description below. Just let some people that aren't in the mentorship know about the fact that I take break evens all the time, and -1s all the time, and they can be that much away from the actual level. Right, they can be that much away from the TP, and I won't touch it because I know what my rules are, and they all know how important those rules are. So, mentorship students, leave some stuff below. I would appreciate a lot. You members are just an absolute amazing. You guys are amazing to like be surrounded by, and I and I would recommend for anyone that does want to surround themselves with a community that's going to push you every step of the way and, hold you accountable and basically make you focus on the responsibility of this market, to check out the description, the link below, the Launchpass link right there on the screen. And if you're already doing amazing and doing great, feel free to get funded above. Fund's been doing great. Everything's been going amazing. But nonetheless, that's what I'm willing to do, right? As price is here, I'm willing for it to come back and hit break even. That's my motive. That's my idea. Then it comes and hits this, and I go, whoa, okay, I got a partial. Nice, +5, got that secured. Price is definitely going to come back up to break even now. All good. It's part of my game. It's part of my strategy. Keeps going. Sorry. Here we go. So price is going to definitely come back up. Oh, it doesn't. Comes to hit the next partial. Okay, secured my next partial. Definitely coming back up to break even now. Usually I get one partial. That's usually what I expect, right? If I don't get a break even or a -1, it's got to be a partial, not two. Oh, it hit two partials. All right, well, now it's definitely coming back. I don't usually have bigger runners. This is normal. It's building up my edge. That's fantastic. My bottom line's increasing, probably at all-time new highs on my account right now. All good. Let's just let it come back up to break even. Nope. Well, and manage the trade as it needs to, right? I get my first break up right here on the 3-minute. So this was based on this right here. Got a break up right here and sent to my team that I would close this trade if it pulled back and broke this as well. I'm just going to show you guys that very quickly here because it was part of today's trade and my positioning. Here we go, right? So I'll close if I get a close above this. You can see I sent this right here. So let's move that forward to the 2-minute to where it happened. So it came up, started the pullback right here. Right, there you go. We get a liquidation, so we know that there's manipulation here. And if this breaks again, for me, that's a change of the actual structure, and it's more likely than not going to continue to the bullish side. That's just how I manage my personal trades, and I break this down, of course, and it's available to all my private mentorship students with depth as to, like why I do this, how I do this, and how I do it across timeframes, and the breakdown of that every single weekend. So what I sent here was if I get a break of this, I'm closing, right? Then all of a sudden, right, and that's coming from this supply. From this demand. So I'm waiting, price never breaks it. Okay, it's coming back down. Again, what am I expecting? For price to come above this, and I'm going to close. And that's it. And that's going to be the end of my day. Okay, cool. Comes down, liquidates everything. Okay, so nothing to do. And again, notice something that I talk about all the time on this channel. A lot of people love to get into that chart porn TA where, remember, they like to think that every zone they draw on because they analyzed it like the Instagrammer, that it's going to hold, it's going to be beautiful, it's going to get them in, they're going to hit 200 RR, and it's going to be the end of the day, and there's nothing ever they have to do, and they're going to take a little picture, upload it to Instagram, get 10,000 followers, start a mentorship, make fucking 500K, and they're done, right? This is not the case. This is not how price works. Supply and demand, the zones are actually made to fail. I talk about this a lot on this channel. I suggest you look up like valid zones, mentfx, and you'll see me talk all about it. But basically, you as a trader want supply and demand zones to fail, even though you're trading from them. Because when you get positioned, that's great. But when it's running, you want it to run. And how does a market run? By liquidating the supply and demand zones that do form. So in this case, we come right through it. And at this point, like, I even said it in the chats. I think I'm coming for all of you or something stupid like that. I'm not going to go find that right now because it's going to take some time. But again, what am I expecting? For price to come back up and probably stop me out of break even. What happens? Comes right down and hits my next partial. All right, let's take my partial. Now we're at 3 partials. This doesn't usually happen. That's 50 RR for me. This is like this usually never happens, right? Usually I hit my first partial, second partial, and that's it for my trade. So it's probably going to come up to break even now. Nope. We keep going down. And now we are right here. Right. Now again, what's my synopsis on this? What's my thought process? Well, yep. I don't usually get 3 partials at all. This is probably my second or third trade this entire year that's around the 50 RR for the third partial. Price is probably going to come back up. Price is probably going to come back up. Price is probably going to come back up. Because that's the way I approach the price as I approach my trading or my psychology. Sorry about that. And right now, right, I don't know what's going to happen. You never do. You never know in this market. It's a random market. However, like I said, if you can recognize patterns and you understand how those patterns play out over time, you can still create edge, which is why when you come into a trading day with an edge that you have and you have experience with it, you can execute it without falter. But also, as you get in, you're not confused about when you're taking losses or break-evens or a streak of losses or a streak of break-evens, because it's normal and it's part of the game. You can see, like, before these 2 trades, I had some break-evens and I think 1 loss. I think it was actually 2 break-evens only this week before this beautiful boomer right here. And again, my overall target is still that daily. It's still with that bearish bias. It's still that bearish bias, the same reason that I've told you before over and over and over again for the last few videos, right? Hopefully you guys are starting to see this and starting to see that, you know, your trading doesn't have to be complicated. You don't need to surround it with all this craziness of like, yeah, I got the highs here and the highs here, and you know, I got the highs here. You know, I'm gonna little click this guy, put the X there, maybe make this a Z, you know, call this a sigma zone. Okay, I got the sigma zone drawn. Okay, so price probably, okay, if I'm a smart guy, price gonna come up, hit this, liquidate, come here, hit the sigma zone, come back down, grab this low, go like this, grab the liquidity, induce buyers, buy this, change a character, click this, hit that, probably liquidate that, hit the S&D, come here, hit the X zone, come back, make equal highs at the X zone, hit the new X zone, boom. Okay, let me take a picture of this, and then you go to my little mentor, you know, I'll post this to him and I'll say, hey, what do you think? Am I ready for funding? Come on, man, come on, right? This is not the way we approach the market. You do not have to complicate it. You can if you want. You can draw all the highs and lows as you want. You can try to predict every little move in the market, or you can draw 3 boxes. Not even. You can understand how the 3 boxes are made, but you can basically draw those 3 boxes. Allow yourself to decide on the targets as a result of understanding how the 3 box moves because you've tested it. Once you understand what the targets are as a result of that, look at the lower timeframes to allow 3 box setups on the lower timeframe to line up with it, and then confirm. And if you're a lower timeframe trader, wait for a liquid session and trade the 3 box as I did here and as I do every single week, and I break down my personal trades. Again, all perspective based. Do not sue me. This is all under a simulated environment, right? So, you know, look at this, take what you want from it, and then go and test everything yourself. It's vital in this market. You know, you're never going to get anywhere living off someone else's word, off of someone else's signals. That's not how this market works or this industry works at all. There's no such thing as learn and earn. There's only learn to earn, and that's the only way you're ever going to find success in this market, right? But nonetheless, a little psychological approach that can help you a lot in your personal trading once you've gone through the cycles of data collection, which, by the way, I have an entire section on in the private mentorship, and I'm going to be adding a few more things there soon. So that has alone been one of the biggest changes for a lot of people that I've seen. That, you know, 2-3 months after that, 2-3-4 months after that, got funded, which is amazing to see. It's one of the craziest things and one of the fastest ways. There's no other skill in the industry where you can basically spend less time and be in the basically upper echelon of the entire industry, which is really, really cool, but also means that you have to put in the work, right? And a lot of people aren't willing to do that. So one of the psychological tips that you can use personally is when you show up, be ready because you already understand your edge and everything else that comes with it because you've seen it. You've seen what it looks like from a back end perspective of what the curve looks like. I'm actually going to pause this for a second and bring up a student. I just don't want to show anything accidentally, so give me 1 second. All right, there we go. For anyone still here, here's a little sauce for you. So JJ, amazing guy in the group. He's been here for a few months, I believe, but he finally sent me a message, 8/16, so this was 2 days ago, and he said, been journaling my back tests all this week, trying to build my equity curve, and I just finished up my testing a few minutes ago. My curve finally hit over 1,000 RR. Just a proud moment seeing my edge hold over time and really gaining the confidence in myself and the work I've put in. The same testing I was doing all week gave me the confidence in my rules and system to get that awesome 1-40 today. So he actually hit a 1-40 on UJ, which was absolutely beautiful. Love that trade. Just phenomenal. I saw a few people watching it. I personally wasn't, but beautiful. Just my weekly thank you to the man. None of this would have ever been a sliver of thought without you. I appreciate you. One day soon I'll be able to afford a challenge and I'm going to run through it, man. Amazing. And you take a look at this, right? And the thing is, if you're able to visualize what your edge looks like over time and you're able to see this and you're able to understand it, when you show up to a trading day and you start to not expect a win every single time you drop your little like chart porn zone, right? Or you expect a break even every time you get an entry, and you expect a loss every time you get an entry, and you expect just one partial to be ran before it comes back. Now you have something that you can actually hold yourself up on. You've now laid a foundation that you can grow upon, right? Because you understand over time what you're able to do. And now and then every psychological issue that comes as a result of that, FOMO, getting in way too early, not waiting for the right confirmation, holding your stop loss, increasing your stop loss as it comes towards it, getting in with a double, flipping the side, fucking going batshit crazy. All of that comes from a lack of this right here. So do it. Put that work in. Apply yourself, right? I even said it here. It's a beautiful curve. Think about how many losses you could take extra, right? So how many more losses could this guy take in the visualization of this edge, and be absolutely fine, right? If you added another 100 losses to this, 200 losses, the edge is still present and the curve is still going to be going upwards, right? That is a vital thing. It is such a powerful thing to be able to do with your own understanding. So when you visualize it, you experience it, and you do it for yourself, that's when you realize what you're capable of doing for yourself, right? And he said, it's a beautiful fucking thing, man. It really is. Everybody wants to avoid the backtesting. That's you guys. That's you. Avoid the videos. Avoid really putting their brain to work, And guess what? You have to put less work in than almost any other industry where you can be at the top end of. But a lot of people don't want to do this, right? This is, if you take anything from this video, ask yourself what you can do to separate yourself from the 90%, because the things you have to do are this small right there. That's how small the things you actually have to do to be at the top of the game is. And you can very quickly kind of push away the dog shit, the bad stuff, the trash education that you might have had, the trash way of stripe pajamaing everything, the trash way of trying to catch everything, because you start realizing that not catching everything is where edge comes from. This 90%, 99% of price action that you shouldn't be trading, you sap that 1% of the actual setups you're looking for, that's edge. This is what you can build multiple millions on. This is what you can build generational wealth on, right? But you need to do it for yourself, and you take the time to do that. Otherwise, you're fucked. And this is some of you too, right? I admit for a while, I just went through the whole course and started live trading with no journal, no testing, no proof. So I kept failing and failing, like a lot of you do too, like I did back in the day. But once I really took the time to step back and use my effort on learning to enjoy the hell out of backtesting and really studying the way my rules and system work, or whether it be loving the webinars because of the straight comedy that comes with them. Thank you, buddy. Once I really put the effort in, the click is a natural way of thinking, and there is no more confusion. I appreciate you, man. I love the group to death. This course, your guidelines, and your teaching is phenomenal, man. I'm ready for the change to finally start to happen to me. That's amazing, dude. But again, notice what kind of clicks people that are profitable or are gaining the ability to be profitable or consistent or finding consistency, where those clicks come from, right? Ask yourself if it's some golden little ticket, some golden little zone, some golden little way of picking the right zone that always holds, right? Is that the ticket that is giving these people consistency or profitability, or is it something different? Something you might have heard from a few traders that have made it, from a few traders that are very profitable, from the greats that you might have read about or had or heard interviews from. Do you think it's that one little golden moving average level, or that one golden way to pinpoint the right zone, or that golden little footprint software with the DOM in there that shows you the exact buying level that you can enter on with your million lots and just see it fucking expand to $3 billion? Or is it small improvements in psychology, in understanding, in edge understanding, in your confidence that allow these people to continuously execute something that to the outside eye can look extremely simple and gain consistency over time and build up a bottom line? Ask yourself which one it is, right? And once you decided on which one it is, start acting on it. So if you do think it's that golden zone and that golden strat, keep hopping YouTube videos. Keep hopping mentors, keep hopping strategies, and see where that gets you in about 3 years. Then after those 3 years are over, switch to the other side and see what happens 3 years later. If that's what you want to do. Otherwise, you can listen to the people that do it every single week, the people that do it every month. Surround yourself with a community that is going to actively tell you the things that you need to start doing, the things that you're missing out on, and the things that you're not doing, and you're going to grow at an exponentially fast rate, right? So from this video, recognize, I don't know if it's going to continue. I expect it to come back. But with an understanding of the way we analyze, with an understanding of what the targets as a result of our analysis is, as a result of the intermediaries that are in here on the daily and the shift into structure on the 4 hour, and the expectation that, again, we don't need to get the pullback, but we can continue liquidating the lows, and then getting involved with the session to the low side with the 3-box system, we get the beautiful trades. And again, this can go anywhere. This can do anything. I expect it to come and clear the lows. And I hope it does, because this will be one of my best trades. Hopefully it doesn't come up, take me out, and then go clear the lows. It can very much happen. Happens a lot of the time. That's part of the game. And the question is, how do you want to play this game going forward? Do you want to keep on hopping around, hoping for that one little click that's going to change everything? Or are you ready to start making small little changes? Let me know in the comments below, if I've affected you, or, maybe take a month after this video right here and come back in a month and leave another comment below, something like that. Means a lot to me to be able to read them. Thank you guys so much for the 100K. I bet by this point we've actually hit the 100K. And if we have, I love you all very much. Thank you so much for that. And private mentorship students, feel free to drop that comment below concerning my own personal losses, break-evens that I talk about 24/7 that you've seen, with the 0.1 pip or whatever it is. And don't forget the best message of the entire video. This is how much you got to do right there to be better than most people in this industry. And that will separate you from the 90%. So without further ado, thank you guys so much. Thank you for tuning in. Thank you for watching this. Leave a like, a dislike, whatever the fuck you feel like, a little comment. I appreciate it more than you know. And by the next time you see me, I'll probably be a dad. I don't know. We'll see.